With Christmas Eve and Boxing Day next week, we expect the markets to be slightly slower than usual. Nevertheless, we want to stay in routine and still prepare next week as we do every other week. With that said, let's start on the DXY on the weekly time frame, and we had some bullish reaction here on this area of interest to the left. Going down to the 4-hour time frame, we can see here we have a bit of structure. We have this liquidity area here to the left, and we tap that in form of this a bit steep 3-touch structure. That's not the best structure, so it's not something I would entertain immediately because we are clearly lacking here a second base. And my overall bias for next week is still more dollar weakness. So preferably we see price remaining a bit in this area and forming a slightly larger bear flag continuation in this area to then entertain more shorts. However, how we are positioned right now, there is also an argument for price just breaking above and retesting this breakout here on the lower time frame to then reach into the next highs here on the left. The overall short bias would still be in place. This would just be a slightly larger, still healthy pullback in the overall scheme of more dollar weakness. And our preferred bias for next week would still be the larger volume accumulation in this area, which would be in line with the overall healthy sequence from the high. We have here impulse into smaller correction, impulse in a larger correction, impulse in the next larger correction. So this would be ideal and definitely a possibility considering the limited volume expected next week. Euro US dollar, therefore we are looking for longs. I did take a trade here, an intraday trade here last week. That's something I will cover in a separate video. And overall here, this is not the best price action. It's also lacking a bit of depth in terms of structure. I'm going here to the 1-hour time frame, but what we can see is we have a clear area of interest here, this liquidity area. To the left, we have here a potential 3 bases into this area, and that would be my preferred game plan for next week. So if price remains a bit in this area, can even tickle down into this area and we see a bullish reaction followed by a lower time frame bull flag continuation, I would entertain a long in this area, even though the overall larger bull flag structure is lacking a second high and lacking a bit depth here in the middle. Therefore, I would not entertain a risk entry here. I would wait for a confirmation and the lower time frame bull flag to enter along. Australian dollar, US dollar, as well on the daily time frame. Again, it's a bit conflicting where we are positioned right now, but you can see here on the high, we still have a gap to the next more significant value area. However, we did break out of all this piece of price action here to the left, then stalled and are now again back in more bearish run. Even though it's a bit corrective, I would still look for short continuations. And going down to the 1-hour time frame, we can see here we have some areas to work with. So this overall price action, even though corrective, looks a bit like a channel, and it is common to see at the end of this channel, the last structure is kind of flat before it then drops out. And that's my preferred game plan for next week. I'd like to see price finishing this structure here into this high to the left, even though, yes, the high is already broken with wicks, and then entertain a short in this area because let me clean it up. This is becoming kind of a bit too messy, and try that again. So here, if we see price stalling a bit on Monday during Asia session, and then we see something like that, that would be ideal because then we have a 1, 2, 3 with a structure within structure. You can then see we have here a smaller structure into a larger 3-touch, which would be ideal for a short continuation. New Zealand dollar, US dollar, we just stay here on the 1-hour time frame. Again, we have a bit corrective price action, but then we finally broke out impulsively through all this area here and are now retesting it, and we have again a bit of bearish reaction here on this smaller, lower time frame liquidity area. Considering it's next week with lower volume, so I would not really jump into a lower time frame trade. I want to see a bit more development across the board. So therefore, I'm waiting for price to remain a bit in this area and forming a larger structure here. That would then be it depends on what time frame you're trading. If it's on the 4 hour, it will then be a 2 touch. If you consider this small here as the first touch on the 1 hour time frame, it would be a 3 touch continuation. New Zealand dollar, Swiss francs, there was a trade up here, a reversal trade on the 4 hour time frame. We just remain here on the 1 hour. Shortly go to the daily to see the overview where we are. You can see here we had this expanding structure into this area of interest to the left, and then we had a nice first impulsive bearish reaction, and we are now more in we lost a bit momentum. You can clearly see after this nice first initial impulse, price started to lose momentum, but is still bearish. And I'm looking here on the 1 hour time frame again for a bit more development for a short continuation. I'd like to see ideally again we remain a bit in this area and form a larger 3 touch structure to then enter a short, which again would be basically the same like we saw before. We have this running channel, this trend channel, a flat flag at the end, and the dropout. Euro New Zealand dollar on the daily time frame. I took a loss here last week on the higher time frame because overall I was looking for shorts after we saw this structure here, this impulsive first bearish reaction, another correction, then a bit lost a bit momentum, and this was kind of a V-shaped recovery. And we had here a very nice bearish high test on the daily time frame, and I took here an entry with the stop loss just above and got tagged out here on Friday. But you can see now already this is not common price action for a short continuation, right? So we have a nice first impulse. You would then if it's just a pullback in a downtrend, you would expect more bearish reaction, especially after such a high test washout candle. What we did, we get the first impulse, we are now in a correction, and now we are looking for the next impulsive move to the upside. So I clearly changed my overall higher time frame bias because we spent too much time here, and therefore the longer we spend here on the high, the more neutral price is becoming, and overall now we can see we have here a 1, a 2, and a 3, potential 3. So therefore, I'm going down to the 1 hour time frame, and this then makes this price action again a bit more complex, because here we can see we had this initial high where I was looking for shorts, then we tapped this high again in form of structure, we had an impulsive move, and we are now in a short correction, and I'm now looking for price to finish the move back to this area of interest and closing the gap, and to then enter a higher time frame long. So this here would be the main game plan. However, if we get on the lower time frame, short continuation, and that's the only thing right now I'm going to the 15 minute. If we get a clear structure here on the 15 minutes, so I'd like to see a second base then. If we get such a clear structure on Monday into London session, that's something I would entertain. I then would entertain a short just to finish the structure before we then go into the long from this area. Pound Canadian, again, on the daily time frame, it looks like messy price action, but overall we can make some sense. We had this larger corrective structure. We have this impulsive move to break out. So we have an impulse in a correction, and we are looking higher time frame for the next impulse and bearish continuation. Then here on the 1 hour time frame, we had this, we discussed that before as well. We had this corrective kind of a reversal structure here. Then we have an impulsive move breaking out. We are then again in a correction, and we now look for the next impulsive move to the downside. And yeah, this is not, it's not the best pair to trade. but I'm overall leaning more towards pound weakness, and Canadian dollar should become a bit stronger. So therefore, with this bias, I would look here. We have here an impulse after this 3-touch structure, then in a correction, in an impulse, then a V-shaped recovery, a retest of the high, and then a sell-off. So that's the thing I would look for here for a next push to the downside, lower time frame bearish continuation, and then a short in this area. This, I'm aware, this forecast, a lot has to happen to then really make it worthwhile to enter here. And that's a forecast that can be like the first candle on Monday morning and the whole forecast is obsolete. That's possible. So I will just move the pound Canadian dollar then on lower priority. But I'm not expecting too much next week then anyway. I really want to see clean price action. New Zealand dollar, Canadian as well on the daily time frame. We had here an initial impulsive move, then we stalled a bit and we would expect the next move to the upside, but the bullish continuation failed. Instead, we are now back in a bearish trend, and I'm expecting to at least retest this low here. On the weekly time frame, there is even a value area here from 2022. So there is also potential for price to retest this low, especially since we can see here we had this. This is a bit more progressive than this, so I would not really call it an impulse, but compared to this corrective phase here, this is kind of an impulse. And then we had another impulse, and we are now in a corrective phase again and like scooping back down to the low. So therefore, I'm looking for price to finish the last move into the low, going down to the 1 hour time frame. And we can see here, let me clean this up shortly. I did not get that here. What we did so far. Let's just look at this piece of price action. We have an impulse, in a correction, in an impulse, and then we have here this correction again. This is a falling wedge, and then we had an impulsive breakout and then a retest. And the retest went into this small liquidity area here to the left. So this is still overall healthy progression, especially for a pair like that. So I would look for the next impulsive move to the downside, followed by a lower time frame bearish continuation, and consider a short in this area. If we see a larger structure here, price remains a bit longer, and we see then again this flat flag, then also perfect, even better. Will take a bit more time, and definitely something I would also entertain. Knowing, again, like the previous forecast, one candle and the forecast might be obsolete. Now these yen pairs. So we had BOJ with the rate hike last week, and yet still yen is continuing to sell off. And you can see here we are clearly still in a bullish momentum run. So why did that happen? It's because overall the real rates, the rates adjusted for inflation, are still lower than zero. So that's definitely bearish for the yen overall. However, we have to be careful because the more yen is selling off, the more likely it becomes for the BOJ, for an intervention of the BOJ. So therefore, I don't really want to be caught on the wrong side, especially when there is lower volume, which might be ideal then for an intervention. However, if we just look plainly at price action and we go here shortly to the 15 minutes on Canadian dollar yen, we do have a base to work with. We have here this liquidity area from this smaller consolidation. That's a clear base. So if we get a clear structure like that, that would then be a 1 hour structure, then yes, of course. Okay, we have, technically we would enter a long. There is enough room to the upside. For the previous highs here, we are trading in a nice sequence. We broke above this previous high here to the left, retested it, and are now in the next move to the upside. And we would expect a small consolidation here before we then see the next move further up. However, we have to be aggressive with trade management. We don't want to let these trades open too long and then run into an intervention and we're wiped out. Swiss francs, Japanese yen on the daily. Let's go to the weekly just to see where we are. We are somewhere in, that's new territory. No idea, no reference to the left. So makes the whole thing way more complicated and way more risky to trade. Something I would, there's an argument to not even touch it because we don't have any historical data here to work with to the left. However, again, it looks on the lower time frame that you would basically entertain along in this area. I wouldn't. I would not entertain anything here because it's new territory, and Canadian dollar yen, there is still room to the upside. Swiss francs yen, where should it go? So in this case, I use the same approach, but I would look the other way. So I would look for shorts here. I have an alarm here, and if price basically fails to form a bullish continuation here and we see a bearish continuation below, then that would be an ideal entry for a short. And if we then are in a short already when an intervention is coming, we are in a huge trade. So this is kind of, you see, I would go for Canadian dollar yen. I would entertain a long, and Swiss francs yen, I'm only looking for shorts. And then we have sugar here, and on sugar, let's go to the weekly shortly. On the weekly time frame, we can see we did tap this area of interest here to the left and then had a very nice initial bullish reaction. And then again, going down to the 4-hour time frame, we have here fairly nice sequence, and we see that in sugar over and over again. Then we had here the initial reaction, we have a double bottom, then we have an impulsive move, we went into a correction in an impulsive move and are now going into a larger correction. I set this entry order here as a limit order. Unfortunately, I did not get tagged in, so I'm not in this trade. But overall, so this will be a mistrade. I have to analyze that in more detail. But I used the limit after this 4-hour close here, and price just continued to the upside. And we are now in a nice momentum run, and we finished this 1, 2, 3 into this liquidity area. So sequence wise, positioning wise, makes all sense. So I'm now I'm going down to the 1 hour for this, definitely not lower. But you can see after this very nice impulsive move, I'm looking here for a 1 hour bull flag continuation in this area and would entertain long, because this is enough room to manage the trade just to the high. And if it then breaks out and continues to the upside, then even better. I am aware there is an argument for a V-shaped recovery, so we might see something like that and the reaction. So that's okay. I'm not interested to take any shorts at this time. For me, overall, that's the only game plan I have for sugar. If price action does something completely different, I will just take sugar off my watch list. So that's it for next week. Merry Christmas, and then see you next time. Bye bye.